Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of November 25 to November 29, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation, as markets pivot in response to key developments across major economies. From anticipated rate cuts by the Reserve Bank of New Zealand to a wave of U.S. economic data releases ahead of Thanksgiving, the landscape for investors and policymakers alike is rife with uncertainty and opportunity. Meanwhile, the European Central Bank faces speculation about its next move amid rising inflation, and Australia's and Japan's upcoming inflation data are set to influence market sentiment significantly. The Reserve Bank of New Zealand, RBNZ, is expected to announce its third rate cut on Wednesday, marking a significant shift from its previous ultra-hawkish stance. After reversing policy in the summer, the RBNZ has embarked on a loosening campaign ahead of other major central banks, including the Federal Reserve. With annual CPI within the 1 to 3% target range, inflation expectations around 2%, and sluggish GDP growth, a back-to-back 50 basis point cut is anticipated. Some speculate a more aggressive 75 basis point reduction, given that the next policy meeting is not until February. Next week, a wave of U.S. economic data releases is expected before the Thanksgiving break, shifting focus back to the Fed after the political shakeup from Donald Trump's election victory. Current expectations for a 25 basis point rate cut in December are between 55% and 60%. As Fed officials have turned more hawkish following positive economic indicators and stalled underlying inflation. Fed Chair Powell, now aligning with the hawkish camp, suggested a potential pause in rate cuts, contingent on upcoming inflation and jobs reports. The PCE inflation report, due Wednesday, is particularly crucial, with Powell forecasting core PCE to rise from 2.7% to 2.8% in October, potentially complicating the Fed's decision-making process. Despite concerns about European growth, ECB policymakers are downplaying investor expectations of a 50 bps rate cut in December. With a recent jump in negotiated wages and services inflation hovering around 4%, there are significant concerns about cutting rates too aggressively. Market probability for a 50 bps cut is at 25%, potentially overstated given ECB rhetoric. Friday's flash CPI figures are critical, with forecasts suggesting a rise from 1.7% to 2.4% in November. If inflation increases as expected, hopes for a larger rate cut may diminish, possibly stabilizing the euro against the dollar. Australia's CPI data for October, due Wednesday, and Q3 capital expenditure figures on Thursday will be closely watched. Annual inflation fell to 2.1% in September, at the lower end of the RBA's 2 to 3% target band. Despite this, the RBA remains cautious, with no rate cuts anticipated before May 2025. If the CPI rises to 2.3% as expected, it could bolster the Australian dollar against the US dollar. Friday's Tokyo CPI figures for November are set to capture attention. October saw inflation in Tokyo fall below the Bank of Japan's 2% target, but policymakers remain inclined towards further rate hikes. Investors are split on a potential December rate increase, but stronger than expected inflation data could solidify bets for a year-end hike, potentially boosting the yen. This week has been marked by significant economic developments worldwide. The Reserve Bank of New Zealand's potential rate cut, a flurry of critical U.S. economic data, and the European Central Bank's delicate balancing act amid rising inflation have kept markets on edge. Additionally, Australia's CPI data and Tokyo's inflation figures promise to shape central bank decisions and currency movements. Stay informed as we continue to monitor these developments closely for their impact on markets and investors moving forward. The global economic landscape remains dynamic and challenging, with every data point adding a new layer of complexity. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.